price without the ability to shift value is not sustainable. How do you establish value? Value is basically established where the majority of trade happens, where the majority of volume is done. Now, the only way that price can move away from that and sustain movement away is if it is able to shift value. Let me give you an example. So what you've got here, and we'll move it through in sequence, so moving from left to right. If a market trades within a range, what you've got to think about here, remember, this is a two-way auction. So anybody who wants to buy and anybody who wants to sell will find it very easy to do so in this range. If you're a seller, there's many, many buyers. If you're a buyer, there's lots of people to sell. So therefore, this is an area where you can say value is established. Everybody is happy to trade in this same range, whether you're buyers or sellers. Now, when the market moves out of the range, this is the moment you have a question to answer. So what we're getting here then, on this move higher, for the market to shift value, yes, you get the initiative move. The market runs higher. But once that happens, what you need to see is buyers actually willing to trade at higher prices. If buyers don't come in and start paying higher prices, the market will just roll over very, very quickly. Because buyers then come in and are willing to pay higher prices, sellers now have people who are willing to buy from them, and the market can then trade. We can do a lot of volume in a certain area that shifts value higher. What that allows the market to do is continue the movement. But again, the same principle. If you move and don't shift value, market can't keep on going. So you look at a move like this would be a situation where market breaks out, fails to keep on going, and rolls straight back. It will trade in the same area of value. Again, that's where everyone's quite happy to accept value at this point in time. So hopefully that kind of gives you a little bit of a sense of it. But once value is established, now you have a situation where there are, for obvious reasons, a lot of people long and a lot of people short in the same area. You know, if people have all been willing to trade in the same zone, and think about this from a longer term perspective, it's not often the easiest when you're thinking about trading to get out of the mindset of being a day trader. You know, that's essentially what we all are. But you have to think about what the overall kind of situation is. When a market sits in an area of value, you're establishing bigger and bigger positions. Some people who think the market is going up are going to use that area to buy. Some people who think it's going to go down are going to use that area to sell. When you move away from value, now you have a situation, take this drop here. Now you would have a situation where anybody who is long has to get out. Anybody who is short in this range up here is now proven right, and they may want to sell more. Another profile feature, and something to, I'm not going to go into its huge detail, but a good thing to always remember is sort of a back of your mind rule of thumb. Markets moving into previous areas of established value will often trade straight the way through them, particularly when they've spent some time away. Because essentially, this was value is established higher. Anybody who's now selling is able to drive the market down here. If you thought this was value as a buyer, and then you thought it was value here, you're not going to keep on buying down here. Buyers get out of the way. So the market then rotates through value very, very easily when it has come from a distance away. Simple little rule to have in the back of your mind. Once the market drops, what then happens is, yes, you get sellers, but now once the price has moved down, buyers are now attracted again. Think of it like the can of Coke analogy. Price drops significantly. Are you willing to now buy at these much lower prices? Yes. People then come in and buy, and this then establishes value at lower prices. So yeah, in very, very simple terms, yes, consolidation is ultimately where value is established from an auction theory perspective. So hopefully that gives you a little sense of it. If I bring this into a practical application, I think it becomes a little bit easier to understand. So let's get on to profile telling a story, because a lot of people just use profile and only look at yesterday's profile, or they only look at the current profile at this point in time. That's not telling you the whole story. The asymmetry that comes and that you can establish from profile often comes across multiple days. It comes from understanding the story of what's happened rather than just simply understanding the profile today. So let's go and have a little look at this in gold. So a couple of other little profile features. Remember, if this is an auction, what will happen is the market will trade down until it runs out of sellers and therefore will bounce back up, i.e. you run out of people willing to sell at lower prices and run back higher. This is what happens when value is established. If the market trades higher, you run out of buyers and the price gets pushed back down. So what we're seeing here then is after a period of consolidation, gold then rallies. And what helps you believe in the rally is that value shifts up. Now, on these profiles, for those of you who haven't seen a profile before, what we've got is a time profile on the left, which is a sequence of letters. Each letter is a 30-minute period and overlaps the previous letter. So this is how it gets thicker and thinner at different points. The thicker the profile is, implies that more 30-minute periods, because they stack on top of one another, have traded over the same area. So that's what's going on here. Then, as we move higher, more time is spent towards the top end. So what we're seeing then is value from a volume perspective. So this is the volume profile. So where the volume is traded on the day. So this shows you volume at price. What you're seeing here then is continued building out of volume at higher prices. And the value area is shown by the purple shading as opposed to the pink shading. But once the price moves higher and value is established here, as low as possible for a buyer is now around about 1958, just down here. So this is now showing you that value shifted higher. The next day you get balance, value is maintained higher. And the following day we get more balance. So there's a lot of accumulation of time in the same area, a lot of volume in the same area. So the market is balanced up here. But what's significant about this is that when we trade down, you get a tail. Tails are significant because tails indicate a running out of sellers. Market is able to push back. So this is a good sign that the market is happy every time the price comes down. To James's point about buyers want to buy at the lowest prices, buyers come in and drive the market straight back up. This is what's called a buying tail. Same again the next day, price drops, push straight back up. The following day, we do push lower, but again, price drops, sent straight back up. Very, very thin tails. You do not have the same at the top. So what this is telling you is that the auction hasn't finished. Buyers essentially have not tried to push the market higher and found out if there are any sellers, or to look at it a different way, buyers have moved higher, they have come in to buy, and sellers have capped the market. So essentially what's happening is sellers are, in a sense, artificially lowering the price. They're selling at a lower price than they potentially could get. So the assumption here is that the price can at least try and trade a little bit higher. And this is where the asymmetry comes in. Because what this is telling you now is that we know that there are buyers at lower prices. They're happy to come in here. But what we haven't seen is whether there are buyers at higher prices. And this would then be the point where you could complete the move towards the upside.